EazyBot have updated their bot strategy, and I'm going to cover that in this video today. So if you're creating a new bot, there's some changes that they've done right at the top here. So let me just show you. I'm just going to give this a demo title, and I'm going to choose the exchange Binance, and I'm going to just choose a coin. It doesn't matter what the coin is. So now that you've got that set up, if you untick this box here that says, use the EazyBot strategy, you used to be able to change this down to a figure lower than 600. But if you do that now, what you get is this red box here that says you can't. So if you don't have the 600, you could still put the 600 in there, but it just means that your bot won't be able to carry out all the trading strategies. And if we look down below, and these are the trading strategies. And if you go down all the bottom there, all the way down, your bot would run out of money before it got to the bottom if you put a lower amount than the $600. And so coming back, so what have they done new? Because this video is about what's new to EazyBot's trading strategy. So I'm going to put that tick back in the box there, and we get this come up here, you see. So if you put a tick in that box when you're creating your bot, you don't have to do it when you're creating your bot. They've got what this is, enable market crash recovery. Now, what this does, this amount of money that you put in here will not kick in until the market drops around 90%. So if I just cancel that a moment, and if you was to take all of these trading strategies here that they've got, all these trades that they're going to place, based on you having a budget of say $600 or above, then the market's going to drop right the way down. If it kept dropping and dropping and dropping, once it gets to 90% drop, around 90% drop, your bot would be stuck and it wouldn't be able to trade anymore. But if you've got this enabled, and you can enable it when you start the bot, or you can wait for your bot to, you can wait for a crash in the market of 90%. I don't think we're going to see that sort of drop in the market. And if it did, you'd be able to come in and enable market crash recovery. Now, how does this work? Well, basically, you'd put a sum of money in there. So let's say you wanted to put in $100, and the bot was trading down at that lower level. It was making trades down where the market's dropped 90%. So let's just go over to a chart. So imagine now, look, say the market pumped up, and then this was to drop all the way back down to somewhere around this green line. From this point here, that would be a 90% drop in the market. Now, if it dropped 90% drop in the market, your bots would stop trading. But when you enable the market crash recovery, what it means is that your bot, as this started to move sideways, or it's going up and down, because unless the market's going to drop by 100% and all the cryptocurrencies go to zero, which is obviously it's possible, but it's very much doubtful, the bot would be able to trade. Now, what it does when it makes those trades down at this recovery here, it puts 10% into your profit, okay, into your USD balance inside your exchange. The other 90% it uses to bring down the dollar cost averaging of your price of your bot that's running, that's crashed. Let's go to a bot and show you. So if we look at this bot, the average price that it's bought the coins at is 0.47. And the price stands right now at 0.46. Now, if Crash Recovery Bot was running and this had gone down to 90% and it's run out of funds, it can't use any more because there's no more left of the $600, that other bot that was trading down at that lower level, it would be making profits and putting a percentage of that profit, 90% of the profit, would go towards bringing down this dollar cost averaging here. And then basically this eventually it would be able to close out these trades and put you in a profit. So this here, this market crash recovery is absolutely mind-blowing. But it doesn't stop there. What else have they done? So if we come down to here, now they call their trades covers. So when you start your bot, the very first time it makes the first trade, it enters the market. Then it's got to wait to see what happens. Will the price go up or will the price go down? Now, if the price goes up by 1.5%, the bot will take profits once it gets up to 1.5%. And if the bot kept on going to 2, 3, 4%, it waits for a retracement, which is a reduction in the price before it actually takes a profit. So it may not get the 4 or 5%. It will drop down. The bot thinks, oh, it's going into a bear run. I better take some profits now. Now let's say that the price kept on dropping. So when you entered the market, if the price dropped by 2%, then the first cover is going to kick in. So you've got your first trade, and then the second trade, which is the cover, is going to kick in. It's going to buy the next buy-in. And then they've added these two new covers here, because what they did was before, the bot would have to drop by another 5%, would have bought the second cover in, which was the martingale formula, where it doubled up. And then it would go another 8%, and it would buy in 4 times, okay? It would use that martingale formula. But what they've done is they split those martingale formulas over 8 trades instead of over 4 trades. And they've got these little drops in the market. Can you see here, it's saying 2%, it drops another 2%, and instead of it buying in one amount, which is this $20, it's going to buy half of that. So it's buying in smaller amounts. What tends to happen in a market is it tends to move sideways. You know, it goes up, it has a pump, it comes back down, it consolidates, and then it finds support and it moves sideways. And if it's down at the bottom, it pumps up, it hits resistance, and then it moves sideways, you know. So let me just show you what that means on a chart. So if you can see here, it came up, hit this white line, which is resistance, and then it went down, it goes up, it goes down, it goes up, it goes down, it goes up. So the bot can make loads of little trades in here, which before it wasn't able to do those smaller trades because it was waiting for bigger drops in the market before it placed its next order. But now what they've done is they've updated the strategy so that it can place orders on those side moving ones, you see, which is a great strategy that they've implemented. So I've got a video from the corporate below this, which is, you can find it here. I'm going to leave you a link for this, but this talks about the market crash recovery. There's a 3-minute video. Recommend that you watch that video. And I will also wait for them to bring out some more updates, video updates, and I'll share those with you as well. But when you're in your back office, if you come up to this bell notification at the top there, you'll see that they'll have links to either blog posts or they'll have links to videos. And that's how I found that link to this one here. It was up in that corner there. So it's definitely worth checking out this video. So just to summarize, if you don't have the $600 and you maybe have $200, you should be able to still start your bot, but you'd have to leave $600 in there. Now, all that means is that the bot's not going to be able to carry out all the trades if the market keeps dropping. So that's why they say if you're in Binance, you need to have $600. If you're in KuCoin, I believe you can go down as low as $200 and the bot will still be able to carry out all its strategies. And the only reason being is that when you're using Binance, the minimum trade that you can have is $11. If you know, anything below $11, the trade won't go through. So that's why they use a 600 here, so that they can place this trade here of $20.10, and then down here they're going to use $11.06, you see, because they're going to use 0.55, and if they were to put 0.5, then it wouldn't have carried out the trade. It wouldn't be able to carry out the trade. So that's why they have that number there. Because you've got 600 in there, and maybe you don't have 600 in your exchange, your bot will be able to trade, but what it will do is it will run out of money, and all you've got to do is add these up until you get to the sum that you've got. And then it will tell you where your bot's going to run out of money, providing the market kept on dropping. It's so simple to work it out. So I'm really excited about the update they've done here in EazyBot, and I look forward to October playing out to see how my returns are going to be. If you're interested in joining EazyBot, you can join for free. You can set up robots for free. It doesn't cost you any money until they make you a profit, and then you pay a small percentage of that profit back to the company, and that's how they make their money. So they're in sync with you. They want to make winning trades so that they get their commission. If they don't get a winning trade, they don't get any commission and they don't earn no money. So it makes sense for them to get as many winning trades as possible. So traders like you and I using EazyBot will pay them a commission. Open up your free account today, click the link below, connect with me if you need any help, or look back on some of my videos I've got here on this channel to show you how to use EazyBot. You have a great day, and I'll speak to you soon in another video. Bye now.